Buy low, sell high. In a perfect world, this is how you get rich beyond your wildest dreams. But 2023 has been anything but perfect. With the peak in rates likely put in for the interim, is now the right time to buy the proverbial high. Hello ladies and gentlemen, welcome to the daily recap show where we talk about stocks and the financial markets. If you like this video, please subscribe, hit the notification bell, let's get into it. And it was a green day in most of the major indices, and by looking at this chart you'd be remiss to think that the rally was in the mega cap 7 names, and that it was, but the rally was actually fairly broad-based among the best businesses in each of the sectors. Financials, Visa, MasterCard, technology, Microsoft, Apple, communication services, consumer cyclicals, Google, Meta, Amazon, Tesla, the big healthcare names, Eli Lilly, United Health. Energy caught a beating, and I believe the entire sector, the XLE, is actually down 1% year to date, which is very crazy when you think about it, considering the fact that they've had such a stellar rally in the last 3 months. In fact, August, October, September, energy was the best performing sector along with utilities, but they didn't catch a bid at all. Real estate got sold too. Generally guys, technology, comm services, defensives, healthcare, those are the sectors you wanted to be in. And this capped off the 7th straight day of gains for the S&P 500, the longest rally in the last 2 years. Maybe we see a mild pullback, but I think we're probably going to see a pretty strong rally into the end of the year. And this was all on the back of rates. Just yesterday, the 30-year was paying 4.85%. Today, it's paying 4.74% in yield. Yields as a whole moved lower, especially on the longer end, and that was good for bond prices. The TLT up 1.47%, and this thing right here, the 20-year treasury, is moving like a biotech name with 3 drugs in the pipeline. And what the market is essentially trying to do is price in the rate cuts that are incoming. We could see somewhere around the May, April, June area is probably when we're going to get the first rate cut of 2024, and then we're probably looking for 4 rate cuts all the way down to about 4.2% for the Fed fund rate. And this bodes really well for equity risk premium. Now I got a new chart here from Yardeni. This was updated on the 1st of November 2023, so it's a fairly up-to-date ERP chart. And Yardeni research look at it a bit different. They believe that the S&P 500 earnings yield minus the real bond yield is closer to 3.5% instead of 2.1%. This is actually a really good risk-free rate considering the fact that yields are coming down. We probably move higher into the 4, 5, 6% range. That's really good for stocks in the short term and the long term. Talking about stocks, we've had earnings season come in, and it's been a fairly good earnings season. We had Datadog report. They did very good earnings. I believe they were up 20% on the day. Uber as well, Rivian, and earnings across the board have been very good. Although market is looking less at what companies are doing now and looking more at forward guidance. But looking at tomorrow, we could see Disney. A lot of people are going to be watching this. AMC, bit of a meme stock. WB reporting, as well as a couple of these other, Affirm, Duolingo, HubSpot, Ionic, big companies in their sectors, earnings, and it's really good to see where these hypergrowth names will go from here. Now that's earnings in the year and now. What about the future? Now we could see that earnings per share has come in about 4% better in Q3 than analysts were expecting. We were expecting around about this area. This is where we are right now, so earnings has been very good, and it seems that EPS has troughed. According to FactSet, they believe that $241 is the earnings per share for the next 12 months for the S&P 500, which is an all-time high. Kind of crazy when you look at this, look at how earnings are, look at forward earnings, and if you actually remove energy from this figure, earnings per share is up 10% year over year. So as an investor, as a longer term investor, 12 months and more, you're looking at charts like these and saying stocks are a good buy, looking at equity risk premium, looking at earnings, looking at forward earnings, looking at earnings per share this quarter, what analysts were expecting, and saying, hey, stocks are a pretty good deal right now. Now, a lot of this has to do with the forward month. What about the year and now? And according to Bloomberg, $142 billion worth of stocks need to be bought back by CTAs over the next month. That's about $4 billion worth of stocks every single day. And if you guys didn't know, it takes about $50 billion of net notional value to move the S&P 500 in any one direction in any one day. So $50 billion. And if you think about it, that in the next month, they're going to be adding $4 billion onto that in buying power, that's very bullish, both in the fact that stocks could move higher. It's going to be supportive for any sell-offs that do occur. Adding on to the bull case, these are the returns every single day in November, in December. Let's change the color. November, from the 1st of November all the way to the 7th. It's a fairly bullish period at the start. We do see some taper off towards the end of this week, the last 7 days of trading. But we've had a fairly bullish run at the moment, and to be honest, it's probably going to continue. I do see we continue this rally into November, into December, considering the fact that earnings per share is coming in a lot higher, earnings are coming in a lot better, and I do think we did see a lot of overreaction from earnings. But looking towards the middle, towards the end of November, it's a very bullish period for the S&P 500 as a whole, as well as December, especially this middle period here, November and December. Very bullish, guys. So we have our longs on. Stay the course. Breaking this down into a more visual format, we have a line chart here, and this is the, I show you guys this every video, but it's just so relevant. This is the November market performance. Pre-election year, normal year. And you can see that we are in this choppy zone right now. This is where we are at the moment, in this area right here. So once we get through this area, we are looking for another run up, but we have been absolutely soaring through the market at the moment. The Nasdaq, absolutely crazy what's happening with that index. We probably go higher, guys. We might see a pullback or two over the next couple of days, but we're probably going to go higher into November, into December. And this was our plan from the get-go. Our plan on the S&P 500 was to buy this area right here on this date. And let's hop into the charts and have a look at this. So we identified the key support zone right here at 4125 all the way to 4150. We did front run this. A lot of us put buys on here. A lot of us put buys here. A lot of us put buys here. And then we did see a massive run up. We broke this level, this key level, this key level. And what I said yesterday, and will continue to reiterate for the rest of the week, is that this 4339 level needs to hold into next week. So if we come down here, bounce off the support area, we need to hold it, looking for a run up into the 4425 area. But if we do want to go higher, let's break this area right here and use it as support. Now moving on to dark pools. There wasn't much in the way of dark pools intraday. It was just a lot of large trades towards the end of the day, and that hasn't really been showing us much in terms of which way the dealers are going to go. There wasn't any large trades as well, but I did want to bring to you the last 30 days of price action in the Qs. And remember, on the 26th, I said a very large trade came in right here, the 49th biggest trade since inception. And this is a very liquid asset, a very liquid ETF. So when you see a number like this, you absolutely know that there is strong buyers right here. And what happened? We rallied up. And until we see something as big as this close out at the top, we're still going to hold on to these longs. But thank you so much, guys, for watching. If you like this video, give me a like. Guys, leave a comment, share this video with anybody you know, subscribe to me. You know I love you guys.